Welcome to Credit Matters. I'm Mike Skirbo, Senior Director, Standard & Poor's Corporate Ratings Group. Today we're going to talk a little bit about the construction equipment rental industry. I'm joined by John Seco, who's a director in our Capital Goods Group. John, thanks for joining.
Oh, glad to be here.
Okay, John, you recently published an article about our expectations here about ratings in the construction equipment rental industry. Maybe you can provide some color on what we've seen and what we expect in the industry relative to ratings.
Right. Mike, what we're seeing now is maybe some early signs of a recovery in the industry. We're starting to see evidence, both anecdotal and factual evidence that there could be an increase in non-residential spending down the road. We primarily look at non-residential construction spending. It's a big driver for many of the rated construction equipment companies that we follow. And as non-residential spending goes, so goes the industry for the most part. And so we've seen a decline for the past 2 years of non-resi spending. Our economists are suggesting it could go further down further in next year, albeit at a slower pace. And so I think that some of the signs that we're seeing, first thing would be we saw an increase in the third quarter GDP estimate, which signified an upturn in non-resi spending. Now, one uptick isn't a trend, but at least it was quite a significant increase. And I think the second indicator for us has been a lot of the evidence from the companies themselves have been saying they've seen year-over-year increases in their sales and also in their utilization rates, which is how much time the equipment is out on rent.
Sure.
And another factor is that the used equipment values have also been increasing, and that's also a good indicator that there's prospects for recovery might be underway.
Okay, so you talked about recovery. You referenced maybe a turning point, still challenged, but a turning point.
Right.
Should we expect? Is there upside to ratings in the near term?
Well, I think one might conclude that if you think that there's going to be a recovery. One thing that's happened in the industry is that the last 2 years have had significant downturn in the industry, and we foreseen that. Our economists obviously were looking at deep declines in commercial construction, and we took ratings actions throughout the bottoming of the cycle, if you will. And I think for the most part, I think we've concluded that the rating stability is likely to maintain ratings where they are. So we don't foresee an upturn or an upside in the ratings per se, albeit that longer term perhaps, if there's a much better or greater than expected recovery, sure, we could possibly see some upside to the rating.
But also then on the flip side, it wouldn't be downside. You wouldn't expect downside.
Well, I think we said absent liquidity issues, we wouldn't see any downside to the ratings right now.
Okay, that's helpful. Let's talk a little bit maybe longer term or some other factors that we're thinking about. I mean, consolidation, other factors that may impact ratings or the industry in the intermediate term.
I think that's a big issue for the industry. Historically, the industry has been very fragmented, highly fragmented, as we say, and that has always led to consolidation. The consolidation is still continuing. The largest players in the industry, you take the top four, they're only 4 or 5% of the total industry each. So it's still ripe for consolidation. It's been quiet during the downturn. But if we do see any M&A activity or debt finance activity, that could pose a risk to the rating. Certainly size and scale matters in this industry, so companies may be wanting to expand their size and get economies of scale, which provides efficiencies in operations. So there could be some activity, but any debt finance activity, as I said, might be difficult at this time, but perhaps we might see more in the way of mergers.
Sure. Well, John, appreciate you joining, and thanks for the insights.
Well, thank you.
We'll see you again next time.